stocks closed sharply higher in a broad rally on Tuesday after data signaled a solid economy, though investors braced for volatile trading this week as voting was underway in an extremely tight U.S. presidential election. The Dow climbed 1%, while the S&P 500 and the Nasdaq rose more than that. The Institute for Supply Management said its survey of the services sector accelerated to its highest level last month in more than 2 years. Meanwhile, the election outcome could take days to be finalized, as the latest poll showed the race between Donald Trump and Kamala Harris was too close to call. Ross Mayfield, investment strategy analyst with Baird, says regardless of the result, the outlook for stocks remains very positive.
You have all of this anxiety about the election set against a very favorable backdrop for the market. Strong earnings, soft landing, Fed looking to cut rates this week as well. And so in absence of some other catalyst, I think the trend is going to be higher.
Stocks on the move included Palantir, which surged 23% and hit
Apple is set to be the first company fined under new EU rules aimed at reining in the power of big tech. That's according to sources with direct knowledge of the matter on Tuesday. EU regulators charged in June that the iPhone maker had breached the bloc's tech rules. The charge against Apple was the first under the EU's Digital Markets Act, or DMA, which came into force earlier this year. Bloomberg reported on Tuesday that Apple was found to have failed to allow app developers to steer users to cheaper deals and offers outside of the App Store. The Reuters sources said the fine is likely to come this month, although the timing could still change. DMA violations could result in a fine of as much as 10% of a company's global annual turnover. Apple declined to comment, while the European Commission did not immediately respond to a Reuters request for comment. The new penalty comes just months after Brussels fined Apple over $2 billion for thwarting competition from music streaming rivals via App Store restrictions. Apple also lost a long-running court battle with the EU in September. That resulted in the company being forced to pay over $14 billion in back taxes to Ireland.
Burger King parent Restaurant Brands and KFC owner Yum Brands missed market estimates for quarterly results on Tuesday. They were hit by choppy demand in the United States and abroad from budget-stretched customers. Restaurant Brands shares fell as much as 4% in morning trading, while Yum stock fell in the pre-market but actually rose 3% in late morning trading. Rising fast food prices over the past year have prompted consumers to cook cheaper meals at home and avoid eating out, hurting traffic across the industry. In response, chains have turned to aggressive promotions like $5 value meals to get lower-income customers back into their outlets. One analyst called it a challenging environment for these companies, but said the discounting has at least stopped the deceleration in traffic. Burger King's U.S. sales declined fractionally in the quarter ended September 30th, compared with a 6.6% rise last year, while KFC's same-store sales in the U.S. tumbled 5% in the same period, marking the third straight quarter of declines this year. Outside the U.S., a challenging economic recovery in China and weak demand in the Middle East from boycott campaigns related to the Israel-Hamas conflict have worsened the sales hit to restaurant operators.
Nintendo cut its operating profit forecast for the year to March 2025 by 10% on Tuesday. The Japanese gaming company has now predicted a profit of $2.36 billion, lower than analysts' expectations. The revision comes after sales of its aging Switch console lost steam. It sold 4.7 million of the consoles in the first half of the financial year. That's down from 6.8 million units in the same period a year earlier. And for the Switch specifically, which sees its 8th year on the market, Nintendo lowered its full-year sales forecast. It predicts 12.5 million to be sold, which would be a 20% drop on actual Switch sales last year. Nintendo previously said it would announce a successor to its Switch console in this fiscal year, so before March 2025, and the group's president confirmed there was no change to that plan, but didn't go into specifics. Analysts said Nintendo shares could remain under pressure in the near term. That's as an announcement on a new console, a major catalyst for the stock, seemed unlikely by the end of the calendar year.